Welcome back to the morning show right here on the Rise News channel. Now for a global business update, Rotus Oddiri joins us now. Rotus, great to have you. How's it going?
Good morning, Rufai. Good morning, Vimbai. Good morning to all our viewers out there. End of the week. Begin with oil, and I just heard the both of you talking about it with respect to our budget benchmark for 2025 in Nigeria, 71.74 for Brent crude. You can see it's actually falling. Earlier in the week, we were about $73, $74 levels. Now it's at 71. West Texas, which is North American grade, at 67. Now that benchmark you're seeing is for 2024, of course, 77.96. As we all know, of course, Nigeria has moved that down to 75. Now, it should be said that the strong U.S. dollar, which has been on like a week, I think 4 or 5 days now of appreciation, is actually weighing on oil prices because the U.S. dollar is, since oil is priced in dollars, it makes oil for traders who hold other currencies. It makes it more expensive. The same thing with gold, which has been heading downwards. Gold competes with the U.S. dollar for a safe haven, and so when the dollar is going up, gold doesn't actually give you any returns, right? You don't earn any interest on it. So that's just a take on how the U.S. dollar is strengthening. U.S. dollar impacts commodities. So not much to add to the budget situation. Front page of today's This Day newspaper, Nigeria's newspaper record. You both have already said it. Said enough. $75 with projection of oil falling further. It puts an emphasis on Nigeria to raise non-oil revenues. I think the exchange rate they're looking at is 1,400, and they're looking at 2.06 million barrels per day. That 1.8 million figure I think Rufai mentioned, I think that includes condensate. So we'll see how things work out with respect to Nigeria's 2025 metrics for the budget. We go to Asia, mixed bag. There was a lot of data coming out of Asia today, but you can see the Shanghai Composite Index that down, as was the Hang Seng. Kospi in Korea and the Nikkei 225, they're on the bullish side of things. So mixed trading for Asia today. Beyond that, we look at Indonesia. I really wanted to get into this. I know, Rufai was talking about how we need to raise non-oil exports. Look at Indonesia did pretty well with respect to its October trade figures. So if you see $24.41 billion worth of exports for Indonesia in the month of October, up by 10 percentage points, 10.25. And you see non-oil there, 23.07 billion, 11%. So that pretty much made up almost all its exports for October. January through October, if you look at that full period, Indonesia exported $217.2 billion worth of exports. 9 months, that's the period of non-oil, 204 billion. So you can see, when you talk to vegetables, machinery, and so on and so forth, the Indonesian economy roaring along. The surplus, the difference between exports and imports, coming out to 2.48 billion, so narrowing a bit. Imports came in at about 21.09 billion, so you subtract that from the 24 in exports, that's what you get with your 2.48 billion. We move to China. Some mixed data coming out of China this morning in terms of retail sales and industrial production. Retail sales coming in up by 4.8%, above estimates of 3.8. So you have to think about the average Chinese and their wallets and what they're looking at in terms of spending. Industrial production, though, that was under expectations, coming in at 5.3%. As we all know, we've covered the property sector extensively. That weighed on the industrial outputs for China in the month of October. And then unemployment for cities. This is not total unemployment. This is just for the cities, your Shanghai, your Beijing, and so on, coming in at 5%, edging down a little bit, 5.1. We got UK economic data just coming in this morning. The UK continues to just tread along. Pretty slow economic growth there. Third quarter, 0.1%. Estimates were for 0.2. You see the September headline CPI, Consumer Price the Index, 1.7%, or under the benchmark, inflation benchmark of 2%. And you remember in November, or earlier this week, or rather earlier this month, they did cut interest rates by 25 basis points to 4.75. They're saying that perhaps the budgets that Rachel Reeves has announced that will likely be inflationary, but also could lead to growth of about 0.7% in the year 2025. So we'll see how things go for the UK. We get to the US. As I mentioned yesterday, Jerome Powell gave a speech in Dallas. He was talking about giving an economic outlook, and as you know, with Trump coming in now, he just continues to field questions about whether he'll be fired, whether he'll be demoted. This time he got a question on central bank independence. You remember that Trump has said that the president of the United States should have some say in interest rate direction. So here's Jerome Powell stressing the need for central bank independence.
Let me say what we mean by independence first. So what that really means is that the decisions that we make about monetary policy, about interest rates, cannot be reversed by any other part of the government except, of course, Congress. Congress created the Federal Reserve by statute and can do what it wishes to do by statute, but our decisions are not reviewable by any other agency. And we are charged to make those decisions with regard to the medium and longer term well-being of the public that we serve. So we're not thinking as we make our decisions about the well-being of any political party or anything like that. So we're just looking at the macroeconomics and doing the very best we can. There's been a lot of research about central bank independence, and what it shows is that central banks who are independent, meaning independent from the other parts of the government, do a better job on inflation. And that makes a lot of sense because, we're thinking really just of getting inflation under control while keeping the labor market strong, and we're not thinking of political factors, which would frankly be a distraction to the already difficult work that we have to do the main job. So the academic research is very clear globally, by the way. This has been a global trend for more than the past 50 years. Advanced economies like the United States economy around the world all have central bank independence of one part or another, in one form or another. The other thing I'll add is that what comes with that on our part is an obligation to be highly transparent about what we do, to explain ourselves to the public, to Congress. Congress has oversight over the Federal Reserve in our system. So we spend a great deal of time talking to the oversight committees and the broader Congress in the House and the Senate, explaining to them why we're doing what we're doing. I testify as a matter of statute 2 times of the year in each of the House and Senate. So that kind of gives us the accountability that we need to be democratically legitimate in a situation where we do have some independence.
And also, we had Jamie Dimon, chair and CEO of JP Morgan Chase. He's in Peru for an investment summit that's taking place. Again, he was also asked about Trump. Apparently, Trump said that Jamie Dimon is not going to be part of his administration. There were some rumors that he will probably be Treasury Secretary. Dimon, check out his response. Take a listen.
You had a big sea change that took place in that vote the other day, and some people were prepared and some weren't prepared. But I think the most important thing is whoever had been elected, and this is my belief, they are entering and going to be responsible for the most complicated geopolitical, military, and geoeconomic situation that the world has faced since World War II. And of course, I wish them all the best. I think people try to help get through this. It could be a difficult thing with a lot of unknowns and uncertainties. And so policy is going to matter. And, of course, who runs the government will be determinative there.
President-elect Donald Trump sends a message to you that he respects you greatly, but you will not be part of the Trump administration as a Treasury Secretary, if that were something that were interesting to you.
First of all, I wish the president well, and thank you. That's a very nice note. But I just want to tell the president also, I haven't had a boss for 25 years. And I'm not about ready to start.
I want to start by also talking about the response in markets in the U.S., which has very much been, this is going to be a pro-growth shock with companies that are going to be investing much more, deploying cash, aggressive in terms of U.S. expansion. Have you seen any signs that that's truly the case?
Well, yeah, you've already seen, the markets have responded quite well. And, I think America needs a growth strategy, so I literally applaud that. I think collaboration between government and business is the way to have growth. they've always spoken about a deregulatory environment. I want to point out, I'm not talking about just getting rid of regulations, but the regulatory environment in most countries has become stifling. And in a lot of countries, including Peru, it's why you're growing maybe at 2.5%, not 4 or 5. In America, it's why we've been growing at 2% for 20 years and maybe not 3. So I do think it's a reasonable thing to have that kind of reform. And that reform has to go deeper than just regulations, which can unleash capital, investment, and banking and stuff like that. It's got to be permitting. And all the related things that come with that, where people, you were just mentioning a mine that someone bought that could do rare earths in the United States, is 10 years, they haven't gotten their permits yet. I mean, it's a shame, and we're doing this to ourselves, and it's a mistake. So I applaud any government that says, I'm going to make government more efficient. And I think inefficient government is one of the reasons that people are frustrated. That why you have some populism, because they may blame, they may look at big companies, but they also know their government isn't spending their money wisely.
And finally, to round off, back to Nigeria again, United Bank for Africa has announced today its rights issue. This, I think they're looking to raise about 239 billion naira. So there are about 6.8 billion shares, par value of 50 kobo. They're offering at 35 naira a share. They're doing a 1 for 5, 1 new share for every existing 5 for shareholders. That's effective November the 5th. And that offer, of course, opening today. If you take a look at a quote from Tony Lumelu, group chair of the group, he said the primary objective of the rights issue is to further strengthen our capacity to take advantage of growth opportunities and sustain our leadership in the banking industry. UBA stock, I think it closed at 33 naira a share, and it's up about 26% year to date. So part of a pretty healthy banking sector that's been doing well in terms of the stock exchange. So we all know what's been going on, the capitalization increases in terms of the thresholds, and all the big banks, all the financial institutions have been, doing what they can to raise what they need in order to power forward.
Okay, so a couple of things there, Rotus. I mean, I'm happy you brought forward the case of Indonesia. Now we are seeing that it's actually possible for nations to really push the path of
Rufai, I knew you mentioned Indonesia.
Non-oil exports. I mean, and look at the Vision 2030 in Saudi Arabia, and look at what they are trying to power at, to be able to diversify. Dubai has done it successfully. Dubai does 16% of its revenue from tourism. They can increase that. But Nigeria has the capacity to do multifaceted revenue points. I mean, before this time, I think I've talked about this ad nauseum, how minerals used to be the case, solid minerals. We could do a lot out of tin in Jos, columbite, many sectors like that. But all our resources have just been stolen away. And it's a corruption that beclouds the judgment. So let us try as much as possible to be able to do something about having extensive parts where we can make revenue from. I think the Asian markets are beginning to cool out now, maybe because they're seeing a pathway, after all this tariff and all of this talk. But we are still all waiting on who is going to be the Secretary of Treasury. But as regards the budget indicators, I mean, I'm not really bullish about many things. The crude oil prices, how we are going to ramp up production to over 2 million barrels per day. They say 1.8 now, but I'm still very iffy about that number. And most importantly, 1,400 to the dollar. So does it mean that we're going to peg it at 1,400 to the dollar? Since Fitch has predicted already that it's going to go about 1,900 to the dollar in 2028, 2027, or 2038. So, I mean, I'm not really bullish. And the fact that we're going to be having more deficit, 13.8 trillion, the debt is going to about 150 trillion at a time where we don't really have anything.
Right. I want to start on a lighter note with Jamie Dimon. It's only in countries like the United States where you see somebody turn down, well, not turn down, but say that, they're uninterested in a political appointment. Because, just before you came on, we were speaking to Adefemi, and she was just giving life to how much of a carnival atmosphere is happening at Mar-a-Lago at the moment. Just like we see here in Africa, where, people are falling over themselves to access the president-elect and see what they can get out of him. But, that's just a side note. Now, on Jerome Powell and central bank independence, I'm pretty sure you knew I would go there. So, this, of course, all emerges from the Chicago School. And in essence, the concept of central bank independence came from an idea that states that the government is always self-interested and is always political. Which, of course, by now we know that in most of the world it is. However, I just have one exception to the rule, that I feel when you look at a country like Nigeria, for example, where the government is trudging along in one side, in one direction now with a 47-point-something trillion budget. The central bank is going in a separate direction, trying to do everything possible to bring down this inflation rate. And in essence, what you do when you increase these interest rates is that you're actually saying that we're sacrificing economic growth just for a short while so that things can stabilize, and then we'll pick it up again. But, the government is coming and saying, no, we're going to spend, and we're going to spend some more. So, yes, there's a strong case for central bank independence. However, I feel that there definitely needs to be a stronger environment of collaboration if they're able to hold each other accountable. Because what we're seeing now, it's so unfortunate, because a lot of the work that's being done by CBN is going to be, it's going to be mitigated or almost cancelled by the outcomes, the effects of us rolling so much cash into the economy. But Rotus, thank you so much. It's always a pleasure, and I wish you a wonderful weekend.